Hi there, welcome to Kneppy Invest. Time to share with you a company I have not looked at all in the past, Cronos Australia. And even though I have not looked at this company in the past, this company did pique my interest just based off the last few Appendix 4Cs this company did release. This company was or is operating cash flow positive on a quarterly basis. And in fact, the last quarter, they were positive by a fair bit. So I was getting interested in this company and I thought I'd have to do some research. And then the company released their full year results and the company is profitable. But not only that, the company declared their very first dividend, which makes Cronos Australia the first dividend paying cannabis company on the ASX. So for all those interested in this sector, the marijuana sector, about 5 years ago, there was a lot of froth, a lot of hype in this sector. You're probably only about 5 years too early because this is exciting times for this sector to now have a legitimate dividend-paying company on the ASX. So what does Cronos Australia do? Now, if you think of the value chain of the marijuana sector, you're going to have, you start with the growers, probably the cultivators, the manufacturers, and then at the end of the value chain, you have those companies that might be selling the products, the clinics, the doctors, prescribers, pharmacies, that sort of thing. And Cronos Australia fits in towards the end of the value chain. They call it downstream of the value chain. And they also mentioned in their presentation that they're focused on the high value downstream end of the value chain for sustainable long-term growth and profitability. And I understand where they're coming from because there's a lot of risk if you're at the front of the value chain. But once you go to the back of the value chain or downstream of the value chain, much less risk in that area and still a lot of potential for growth. And that's exactly what this company is doing right now. They have two divisions, and I'll talk about a significant merger this company made about a year ago, which was company-changing merger. And the two divisions this company has are CanView, which is Australia's largest medicinal cannabis marketplace. So they provide, or that's sort of a marketplace for suppliers and brands to sell their products on. And they also have CDA clinics, which is clinics nationwide. And that probably has something to do with medicinal cannabis. And if you do need medicinal cannabis, maybe you go to a CDA clinic. Now to a few other facts in regards to Cronos Australia. And to be honest with you, a really interesting history because this company was founded through a joint venture, 50-50 joint venture between Cronos Group and New Southern Capital. Cronos Group is a $1 billion company on the NASDAQ. So it is a listed company on the NASDAQ. And right now, the valuation of that company is just above $1 billion. In fact, when this company did list, in their prospectus, they mentioned Cronos Group had a valuation then of about $4 billion. So share price and the value of that company has gone down a fair bit over the past few years. And New Southern Capital is a private equity firm. Cronos Australia listed on the ASX 7th of November 2019, so just before the COVID-19 financial panic. And to be honest with you, this company wasn't doing much for me at all. Very little revenue and very little growth in that revenue. And then for some reason, Cronos Australia decided to merge with another company called CDA Health in late 2021. And this was a company-changing merger for Cronos Australia because it seems like CDA Health is a company that brought everything to the table. So I'm not sure if this was an equal partnership merger because it seems like everything that Cronos Australia is right now has to do with CDA Health. For instance, their CanView and the CDA clinics both come from CDA Health. Not only that, two of the largest shareholders in Cronos Australia, Jansen and Headley, who combined own 47% of Cronos Australia, were two directors or co-founders or founders of CDA Health. And they do sit on the board of Cronos Australia right now. The current CEO of Cronos Australia is Rodney Cox. He also has a 3.6% stake in the company, but a lot of skin in the game. The very fact that Jansen and Headley and Cox combined own more than 50% of Cronos Australia, and Cronos Group own 10% of the company. Now, the current market cap at 55 cents, and I did have to change this because the share price of Cronos Australia went up 15% on the 5th of September, is now at $304 million. I mentioned a few days ago in another video that the market cap of this company was about $100 million, or even less than $100 million. And it was a few months ago. This company share price has tripled. Well, actually, it's tripled over the past 2 months, simply because of the financial state of the company and improving financial state of the company. The very fact they're profitable, now operating cash flow, free cash flow positive, and they declared a dividend. So the market is really excited about this company right now. And the ticker code for Cronos Australia is CAU. Now on to financial year 22 results for Cronos Australia. And these are absolutely fantastic results. So fantastic news for shareholders who have stuck firm with this company over the past few years, particularly those who bought in around the IPO. Revenue up to 67 million, so significantly increased from last year. But it's hard to sort of compare this year's results to last year's results because of that merger with CDA Health. EBITDA 10.5 million, profit 6 million, operating cash flow 13.5 million, and the earnings per share for this company is sitting at 1.25 cents. And with the share price now at 55 cents, that means the P/E ratio of this company has risen to 50. And it has actually risen a fair bit over the last few days because the share price is on absolute tear. And I'll show you the chart later in the video. Now on to the cash flow statement for Cronos Australia for financial year 22. Receipts to customers almost $70 million, and the company was operating cash flow positive by 13.5 million. Not a lot going on in investing and financing activities, apart from the fact that actually did acquire $2.5 million of cash with that merger with CDA Health. But they don't spend a lot of money in capital expenditure, only $365,000 in plant and equipment, a payment of security deposits, $311,000, payment of transaction costs related to the issue of shares, $1.2 million, and lease payments of $318,000. So the majority of that operating cash flow fell to the bottom line. And this company actually increased their cash on hand from 2.1 million to 16.1 million. So no doubt why they decided to declare a dividend is because this company is generating a lot of cash in their business. And more than likely that cash generation this company is seeing right now will be sustainable for the long term. And that is the reason why this company is now a dividend paying company on the ASX. I've already mentioned that before this merger with CDA Health, I wasn't really following Cronos Australia all too closely. Now, receipts for that non-merged company were increasing, and they did increase from $50,000 to $1.1 million in the September quarter in financial year 22. But you definitely can see where this merger took place, because all of a sudden receipts rose from $1.1 million to $16.5 million. So it's pretty obvious which company or which part of the merger brought the company changing things to Cronos Australia. It was all CDA Health. So I'm not sure why CDA Health needed this merger. There would have been some benefits to CDA Health, but it seems like the majority of benefits fell to Cronos Australia and fell to the shareholders of this company. And after the merger, we have seen receipts continue to climb. In fact, they've risen from 16.5 million to 23 million. So almost have risen by about 50% over a few quarters. So if this momentum can keep on going, this is going to be a company that generates significant amount of cash in their operation. So again, it's not hard to understand why this company has decided they can actually issue dividends or pay dividends to their shareholders. Now to the valuation metrics or numbers for Cronos Australia. And I did have to update these numbers. I am recording this video at about 5 p.m. on the 5th of September. And I actually did prepare this video before trading began on the 5th. And these numbers were significantly lower than they are now, because the share price of this company has risen another 15% on the 5th of September, which means these numbers do have to change. So these numbers will change every single day, depending on the share price moving up or down. Now, my assumptions is the share price won't move all that much from day to day, but for Cronos Australia, right now, the share price is on a tear. Wouldn't be surprised to see a lot of day traders really interested in this company just because of the volatile nature at this point in time. When I say volatile nature, I'm meaning the share price just keeps on going up of the share price. So right now, the P/E ratio of Cronos Australia is 50. Price to sales 4.5. Price to operating cash flow 22.2. I wouldn't be surprised if this company can double their profit over the next few years. So that means a P/E ratio of 50 doesn't look all too high. So just imagine share price stays where it is right now at 55 cents. And if the company can double their profits over the next 2 years, that means a P/E ratio in 2 years' time would be 12.5, not 50. So that's the power of a company that keeps on growing, and why sometimes you can justify a pretty high P/E ratio. And for this company, 50 may not be that high at all. Now onto the daily chart for Cronos Australia. And this goes back to about July, August of 2021, before the merger with CDA Health. And before the merger, there was no interest in this company. Really low volume. The share price was just going sideways at just above 10 cents. And it's fairly easy to know when this merger happened just by looking at the chart. So in September, around about the middle of September, we suddenly saw a lot of volume coming in, and the share price doubled in a few trading days. So that's when the merger happened, or when they made the announcement of the merger. And this merger was, well, the market did like this merger because the share price kept on increasing from September at about 20 cents all the way to a high of 40 cents, which was reached in February. And then the interest in this company fell away from February all the way through to about July. The share price dropped from 40 cents to 17.5 cents. And the company needed that interest to come back from the market. So the company released their Appendix 4C and the financial year 22 results, and they announced they're going to issue or pay a dividend to the shareholders. And that is what got the market back interested in this company to a pretty big way, because the share price has increased significantly over the past few weeks from about, so we'll say about 25 cents to a current share price of 55 cents. And that's in about a month, or just over 1 month. Now, my only concern with what's happening with the share price right now is the exponential rise we are seeing over the past week. The share price has really taken off, not quite doubled in about 5 trading days. We're also seeing increasing volume. So I think day traders are getting interested. And I think whenever you see an exponential rise in share price, there's a greater chance you're going to see some selling coming in, some profit taking, and the share price pulls back. So that's what I'll be looking out for over the next few weeks, is a pullback in the share price. Now, that doesn't mean the share price will pull back, but historically, and in the majority of cases, whenever you see something or any sort of price increasing at an exponential rate, there will be, in the majority of cases, a pullback in the price of whatever's rising exponentially. So that might happen with Cronos Australia, doesn't mean it will happen. So that's really all I have for this video on the very first dividend paying cannabis company on the ASX. That award goes to Cronos Australia, thanks to the merger with CDA Health. If you have any questions about this company, or really any other company on the ASX, any thoughts, any opinions, I'd love to hear it from you. So leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.